What's up, everybody? Give me a couple moments. I'll wait for you guys to join. We'll do the watch list build for Monday. I actually already did the watch list, so I'll save you guys a bunch of time, and we'll go over the ones that I currently did so far. So give me a couple moments, let you guys join, and I'll be right with you guys. All right, so as you guys can see, I already built the watch list, so we'll take some cut down some of the time on going through the whole list. But we'll take a look here, guys, at the SPY, so you guys can see here's the SPY on an hourly chart. Again, this is what I want to bring your guys' attention to. Again, very, very important. What's up, Chemo? How's it going? We've talked about a lot about patterns and charts and, that whole adage in the industry of, advisors, financial advisors, stock traders. They say you can't see these things coming. And, it's a bunch of bull because, guys, all this stuff that you guys see here are patterns, right? They're candlesticks and they're patterns. And then you got to find, you got to see these patterns overall, right? So these candlestick patterns in general, and then find the trend lines, and then obviously choose your, you can't see the screen? Anybody else not able to see the screen? That's kind of, Chemo, can you see my screen at all? Now I'm thrown off. Can you guys not see my screen? I can see myself on the screen. Hold on, it's a delay on YouTube. So you guys just let me know if you can see my screen at all when you guys hear this. That's very odd because I'm watching myself play back right now. Could be on your end. Yeah, try maybe exiting out and then going back in. Anybody else watching me right now, can you guys see my Thinkorswim chart at all? You are? Okay, cool. Excellent. Thanks, guys. All right. So what you guys want to do is you want to find these channels and these trend lines. And, like people will say, well, how do you connect trend lines and stuff like that? Again, it's not always foolproof, but you want to find as many peaks and as valleys as you can, right? So, I see how I connect this peak. I can connect this peak. And it kind of goes, again, you want to connect at least 2 peaks. If you can get 3 or more, great, right? So you can see here's a valley, here's a valley, and here's a valley. So now we have a trend, right? So now here's an hourly chart right here, and you can see, on the hourly, it's starting to fail. You can see that pink line, the 50 SMA. Moving average lines are bearish on the hourly. So, if it doesn't hold on Monday and it falls, it could easily fall out of that kind of that rising channel. Excellent. Glad you're back, Richard. And then you can see support down here. So this is an hourly chart. This is kind of, this is an in-between on the daily. So if you go to the daily chart, you guys will see here's the kind of the channel right here. And it's caught right between that red line and the blue line. That's the 9 and the 20 EMA. And you kind of have a doji at support. So ideally, if you're bullish, you want to see these moving average lines cross, go back up, and have price get above here. So as you can see, it's caught on the daily. And on the hourly, it might be starting to roll over. Ideally, this is what you want to see if you're bullish, right? Price just kind of riding those moving average lines, right? Kind of riding it up. And then this is where you can see the warnings, guys, where price starts getting kind of far away. You can see these kind of spinning tops, these smaller candles. Hold on one second, guys. I got to pop my ears. I just took a shower, so I feel like I got water in my ears or something. So when you start to see price getting way up here and these extra, doji or spinning top candles after, again, you can go, let me just, connect your trend lines You know, you can kind of go back to like right in here. You can go like that, or you can go like, not that one right there. Just showing you guys, like zooming in up over here. You can see right here, see how I can connect that valley with this valley in here. And then you can see kind of it's going up, and then see how it starts to fail. Now, sometimes when it's very close like this, you could just use the moving average lines as your guide, right? So you don't necessarily need to do the trend line, but having there, it's, you know, it's a good guide. Or right in here, see, I can connect this valley with this here, and then when it started to break down here, that's not a good sign, right? So you see how I kind of connect these channels up like this, and price is going up, and you can see as it keeps hitting those ceilings, it comes back down, and it's kind of riding in these channels, right? So it's very important to be able to discover that. So again, see the candlesticks, the patterns, the channels, and that's what helps you to be able to trade. You know, I mean, it helps you to be able to see things. And then when you're managing your, you know, when you're looking at your 401k and stuff like this, you know, this is where, again, depending what you're invested in, when the market starts getting upwards, like, you know, kind of in this channel, and then you can kind of like, you can kind of come back over here and kind of do this right here, connect these peaks. You know, as it's starting to hit these ceilings way up there at all-time highs, this is where maybe you're saying, in your 401k, or, you know, maybe you're not going to be as super risky up here because you want to watch for price to pull back, hold these support levels, and move back up, right? And so if you're risky way up here, obviously, I'm sure many of you guys have lost a ton of money. And that's the problem with like financial advisors and stuff, where you got to ask them, you know, again, if just for me, perfect example, if I had my money with my, you know, a normal advisor at my age, they would have had my entire 401k risky, right? So risky up here, and then you take a 30, 40% drop, you know, again, let's just say you just have $100,000 in your account, you could be down $30,000 or $40,000, whereas a simple phone call or a simple move could have put you risky. Or guys, you know, something you can do too, if you're starting like a smaller IRA to trade in or grow, you could trade the SPY in and out, you know, buy the dips right in here, ride the 9 EMA. You can swing trade or day trade it and kind of grow your account on the way up. You know what I mean? So it's another way to do things. Once you know these patterns and these trend lines, it's super important. Remember, most stocks run with the market. So if you can figure out these trend lines, again, you see how I'm just connecting as many peaks as I can, as many valleys as I can. And then you have right here, just kind of this channel, right? And when price starts to fail that channel, then you can do kind of a down channel, right? So you can go as it's up, you know, I can go right over here and I can go down, right? See how I can connect kind of down right in here. So I can go down here. I could go down, excuse me. You know, kind of, you guys see that, right? So it's kind of a down channel. And it's kind of a falling wedge, falling down channel. So now you have, if I zoom in, now you can see there's a rising channel in this falling channel. Yeah, Richard. So yes, I'm using the 9 and the 20 this is the 9 is the blue line, the 20 is there. I also have the 13 here, which is the green line. So now you can see this rising channel right here. If it can't break out of this resistance level, then it may fall back down, right? So you can see, right? Price is up, it's coming back down, it's in this channel. It gets a little crazy, like it's been crazy lately on this. Obviously, you'd like to see it more kind of tighter, right? But you can see as it falls, you kind of have these channels that go back up again, right? So kind of falls, goes back up once it fails down the channel. Right here, this has been much harder to trade. Like I was telling you guys, it's a lot more difficult when it's doing that. So, you know, it's, again, see how you connect this peak right here, or this, you know, as it's falling right here. So I go 1, 2, 3. Sometimes it's harder to get it on a daily, and that's where you can go into an hourly right in here and catch it in the hourly. Sometimes you can kind of move it in a little bit closer on an hourly. So I can kind of zoom in right down in here and kind of right here. See, I can get a little bit tighter, a peak, peak, peak right up in here. You know, these values are pretty close right here. So you can see it's kind of this falling channel. It's starting to rise back up if it can't break out in here. So and you can see some resist. If it does break out, you know, if the buyers come in here, it still can continue up, you know, so it can trade in that range and go up. But when it starts to fail like this, then you got to be careful. And you can see these lines of support, and it could easily, if they, you know, you got to see these moving average lines. It's looking kind of bearish at the moment. So we'll have to see come Monday. And that's where you got to look also, again, the candlesticks patterns as well. What are the patterns showing you? That's where you can go to an hourly. You can go to a intraday 5-minute setup, you know, see how these lines still kind of connect right in here. So this is what the stuff you want to learn. And this is why, like, if you're kind of new and you're just like, hey, you just want to make money and what should you buy? What should you sell? If you don't know this stuff, this is where you're going to get burnt. And especially when you're, the number one really question when you're asking your advisor, you know, what to buy and what to sell, if your advisor's not talking to you about exit strategies when you buy something, that's a problem, right? When you buy something, it just doesn't go up forever. And you know, like I was talking to I was talking to an advisor before, and I think I was telling you guys this. There's a game. Let me see what you guys see. Sean says, "Oh my God, yes, price does move in channels and breaks out of them. Now 100% see you at the best trader meetup. Can't wait." Nice. So again, you can see these channels, right? So a conversation I was having, and this is where you got to be. This is a test to talk to you guys, right? Talk to your advisors. And now if you're with, you know, some of you guys might have, you know, your 401k through, you know, maybe your job, and it might be with like a Fidelity or TD Ameritrade and those types of things, right? And I had an experience before. This happened a couple times where, you know, again, I didn't know, you know, again, I didn't know mutual funds, stuff like that. So I was trying to just manage my IRA myself. But then these companies, many times you know, if like you want to go like TD Ameritrade, first of all, you have to call them and move your funds, right? So they have whatever, like aggressive, moderate, something growth, XYZ, yada, yada. They have several different categories, but it's not, as of right now, they don't have a button you can just move yourself, right? So if I have my IRA with TD Ameritrade and I want to move my funds around, the problem is like, you know, you have to call them and you're going to say, hey, listen, and this is what happened to me back, where was it? Somewhere right in here, right? So I was saying, hey, listen, I want to go, like, I said, just put me cash right now. I just wanted to go safe. I didn't care. I was like, as you guys remember, I was telling you guys, just be careful. When I was making the videos, I was saying, be careful of the market at the top like this. I said, oh, you know, you could still keep making more gains, but, you know, we're going to election year and stuff. I wanted to see things pull back, right? So somewhere, actually, it was maybe in December. Yeah, it was back in December, right in this range. So it did. It went up a little bit more. But I didn't have the time again, and I knew I had this experience at TD Ameritrade. Whenever I'd call them, I'd get annoyed because they're like, oh, sir, you know, they give you this lecture, right? They give you this lecture. You're in it for the long term, sir, blah, blah, blah. I said, yeah, I'm not trying to go safe for a very long time. I just want to see the market pull back, right? Let's probably, let me go to a weekly chart. It'd be easier to show that. Yeah, it's a little bit easier than the daily. Sorry, guys. My mouse is just really wonking up a little bit. So I think it was probably right around in here, right? So as price is kind of getting very overextended, I was getting a little bit nervous. I was going into the election year and stuff. I was warning of stuff like this, but I didn't know it obviously would be a virus that brings things down. But I was getting a little bit nervous. I wanted to go safer. And so again, so they give you this whole roundabout thing on the phone, right? You're in it for the long haul, right? So guess what would have happened, right? So they did what I said, because, sorry, I'm rambling here. My brain is scrambled. They finally do what I asked them to do. after a lecture. This happened 2 to 3 times. But they give you this lecture like, sir, if you keep doing this, too many times, we could cancel your account. And I was just so pissed off. Because I'm doing so much stuff with Bullish, Bearish, stuff like that. I couldn't figure out learning how to just do all this, like mutual funds, stuff like that. I don't have any background in mutual funds and seeing if that was something I wanted to do. So I just make a phone call. Hey, risky, safe. And I just didn't know any different. Right. So I was really ticked off by that experience, right? So I was just like, this is ridiculous. It shouldn't be that hard. They shouldn't threaten me. It's almost like, yeah, I did. I did post, yes, I was saying Trump, he posted about negative interest rates back in December when the stock market was at all-time highs. It's just very weird, right? So I've been really kind of annoyed by this, guys. And if you guys know me by now, I don't have the ability to do 2 things at once. I can only I can only focus on one thing at a time. On one hand, it's very good, but on the same, at the same time, it's not, because I have to be focused on what I'm focusing on. So I called TD again. This happened last night. I called him up again. I said, are you guys ever going to give me, I got this rep on the phone last night, and I was telling her, I was like, I love you guys. We're a trading company. We promote you guys all the time. It's great, but I have my IRA with you guys. And if I want to do mutual funds, I want to learn more about mutual funds. Do you have something you could do you have any videos I can start learning about this? So I just want to see if it was just, something I was interested in and stuff, and just kind of doing it on my own. And I said, why do I have to call you guys? And then I get a lecture every time I call you guys, right? And she apologizes and yada, yada. And then she goes into the lecture again, right? So I was like, ma'am, I don't need a lecture every time I call. I just want to be able to do this stuff myself. Is there a way to do it? Get in and out myself? Well, eventually we're going to put self-manage buttons on there again. And she goes, well, sir, the market just, when it falls, it goes back up again. I said, okay, perfect example up over in here. This is TD Ameritrade's rep on the phone. This is their 401k or their IRA department. I said, let's just say I had 100,000, right? We'll just say an even number, right? I said, well, okay, when I called you guys, just say up in this area, and I want to protect, if I just wanted to go cash or the safest funds possible, I don't want to lose money at a top rate here. Just say I had $100,000 and I'm in risky funds, and then this drops to say 30%. If I had $100,000, now I'm down to $70,000 down here right now. I just lost $30,000. Well, sir, the market goes back up again. It always goes back up again. And now, so I'm like, yeah, but ma'am, if I was cash up here and not risky, I wouldn't have lost the $30,000. I could have let this happen, kept my cash, and then when it starts to reverse and go back up again, now I can start at my $100,000 base again and make more money. I'm not starting at $70,000 trying to get back up to $100,000. Is this making sense to you guys so far? Yes, Angel, I am. So then, and she goes, yeah, well, I lost that 30 or 40% too, and I just realized it's going to go back up again. And these are people that are managing my money. And I'm saying, that's like saying to you guys right now, hey guys, buy a penny stock way up here. Don't worry, it'll eventually go back up again. I know it's not the same thing because the stock market typically will go back up, but when will the stock market go from here back to here again? More than likely, it will get back up here again, but how long? Will it happen next week, next month, next year, 5 years, 10 years? We don't know. So what happens if the market just goes like this for just a while, right? And trades up and down and sideways and yo-yos. And then meanwhile, you're still dealing with all that loss, this whole entire time. And that's the game that just really ticks me off. And, you don't even have to, guys. When I realized last night with mutual funds, I had this kind of oh bleep moment that I'm not even into mutual funds. I was just I didn't realize that I could just literally I can go and trade ETFs in it and I'd be much better off. And it was so obvious to me, but my brain, it just connected. I'm like, what the hell was I thinking? I don't even want to be doing mutual funds. So that's something I just really blew my mind last night, because that's just to show you guys how my brain just can't. I missed something so completely. It was the most obvious thing. You guys are probably thinking, how the heck did you guys not? How did you not know that? I'm kicking myself saying, how the heck did I not know it either? I just never looked into mutual funds. I have no clue how they were, you know, and I've never trusted financial advisors, obviously, because of stuff like this, right? Because when I call them, they're going to allow me to lose my 30% or 40%. They're going to allow me and they threaten to cancel my account because of that. And I was so pissed off, so mad about that. So that's something, guys, you know, you can buy SPY ETFs if you wanted, you know. So if you have an IRA, I'm not saying to do this, but, you know, if you started an IRA or had a side IRA, you can buy and sell, you know, just shares of the SPY, you know. And that's just, it's so, sorry, that was my rant. I was trying to make this a quick video, but I was just really ticked off talking to TD Ameritrade. Yeah, exactly. Once you're cash, they have no power. That's correct. And that's the whole thing, guys. That's the whole thing that just really ticks me off, is that they'd rather just see you lose the money because you're with them. And that's the game that I just hate. So, you know, I'm still trying to take this in, just how obvious that is. I just, you know, we've been doing Bullish Bears now for a few years. You can see I just make thousands of videos and blog posts. So I'm always focusing on kind of this stuff, you know, helping you guys out and putting that stuff out there that I've always wanted to like get into. Oh, how does managing my IRA work? And it just hit me like a ton of bricks. I was like, wow, what an idiot I've been. Like, it's actually so much easier. You know, I know obviously you could just buy and sell stocks in it, but I was so caught up in like the mutual funds thing, you know, like, oh, mutual funds, I got to learn it and whatever. I'm just like, geez, you just, instead of mutual funds, like you could just buy and sell, you know, SPY or gold or like whatever in there, and, you know, whatever ETF you like, and just ride it up, like ride the nine out. When it starts to fail, maybe you're cash until it goes back up, ride it up again. When it starts to fail, you know, maybe in these areas you're going cash, or you're doing something in inverse, right? Trading it. Is that making sense to you guys? Wow, that was a rant. I had to get that out. But so that's the whole thing. Like I was trying to say to you guys, is the financial advisors, and talk to them. If they can't read this, if they don't know how to do these trend lines, you know, that's a big problem. Very, very, very big problem. Got to know charts. All right, so after that rant, let me just show you guys the watch list for Monday. Again, not really the greatest, but, you know, a lot of stuff going on in indecision mode. CHFS. So we had this one at, for a penny stock, a sub $1 penny stock. You want to see if price can get above that 50-cent marker. And then you can see the 100 SMA around 64 cents is resistance. And then obviously, you know, whole dollar, you know, these areas on the way up. So again, I'm not a huge fan of this trading style, but there's a ton of people that like these sub $1 stocks. So if a stock goes from 50 cents up to 60 cents and you can scalp 5 or 10 cents, it's just another way to use your account as leverage. So I put this one on CHFS to see if it can get above that 50 SMA with resistance at that 100 SMA there. And then obviously dollar and upwards. All right, you stocked up on canned food. I hear they might be, you're welcome, Angel. I hear they might be doing a quarantine for, I live in Connecticut, but I think they might be doing a quarantine for New York, Connecticut, New Jersey, prevent people from leaving. CXTR, this one right here, again, not really the greatest. Again, you guys see how the charts, they're a lot more messier. Me personally, that's why I like trading the larger caps and stuff like that. But again, there's a lot of you guys that love penny stocks. It's another great way to make money. It's just not my trading style, you know. So with right here, if it can get above 61 cents, look at resistance right up these moving average lines. But again, you know, if something can, like a 60 cents goes up to 74 cents and you can scalp 5 to 10 cents, if you had 5 to 10,000 shares, that could be a few $100 or more. You know, again, just using your account to get in and out. But again, you still need to know patterns, right? So you can see stocks like this, again, they pump up for a few days, they dump back down. And these are just, highly day traded stocks, right? So again, see if price can get above that 61 cents, and then you can see resistance around the moving average lines. Let me look at your comments here. AYTU. This one right here, again, as you guys can see, like the setups just are not, these are not my favorite setups, guys. I'm trying to get, Angel and I are struggling to get stuff on the watch list for you because of all the indecision. But on this one right here, you can see if price can get above that 186 level, again, as you can see, the trend lines are kind of harder to do as well. But if this can pop up, then obviously, just see if it can get a pump and then break $2. This is where, again, you're going to have to go to the intraday setups and look in between. And as you can see, just, they're very choppy. Not my style, but people all around love trading these every day. They might get in a break on VWAP like this. It goes up from 171, $1.71. They might scalp, up to high a day here. And then when it starts to fail, get out, 5 to 10 cent move, right? So again, these three, I don't really love these ones. Same thing with kind of BMRA, kind of holding the 13 and the 9 EMA. If this one can break out, kind of hold, let me look at the hourly. If this one can get a pinch and move back up, you can see some resistance right around that 870 level. And then see if it can break that 870. Then it might have room to pop up again. HP, let me take a look. HP may be a potential short. You'll see my large cap list is mostly short stocks. So you can see it's starting to fail the 9 EMA, potentially. Let's look at the hourly. Yeah, it's starting to fail. So if it's failing right around that 50 SMA, look at that 100, that 1570 level for support. And if it fails that, that could be... so as you guys can see, right? So you can see, remember those trend lines we're talking about, right? It's kind of like, kind of like that megaphone pattern. It comes up, comes back down, goes up. Right here, the buyers don't hold, and then it starts to fail, right? You guys see these channels? Right here, I can connect from up here down to here, so I can connect these peaks, right? So now, now I can kind of maybe go in here and do this. Now it's got a falling channel, so you guys see how I'm just kind of connect some of these valleys down in here, and then it goes right out to over here, right? So it comes right back down, right? So now we got to see if it holds. If not, if it's going to fall back down here, or if it's going to, buyers come back in and push it up, then you have the resistance in here. You guys see how to kind of just connect as many peaks and valleys and find these trend lines? Whew, my brain today is fried. I did go for my walk today, though. I went for a walk, which was nice. A lot more people walking. I don't know if they're really practicing social distancing very much, though. They need to do better social distancing. All right, so Coca-Cola. I had this one as a bearish. Pretty much all these ones on the swing trade watch list I have as bearish. So you can see, right? Move right back up to the 9 EMA. Rejects. Now it's failing the 9 EMA. And now look at the hourly and see, right down. So this one right here, I want to see, it's right at the 9 EMA. Could pop up right here. We got to watch and see if it starts to fail that 50. I was looking kind of, because the moving average lines are kind of bearish right now. If it starts to fail this $42 marker, you can see some support down in that $41. So I'm trying to see, this one's just looking a little bit more bearish to me. And so as you guys can see, remember, like kind of just drawing right in here, right? So, you kind of have this, you guys see I'm drawing these channels right in here. So right, price up and down in these channels, up, rejecting right up over in here. It's coming back down. It's kind of, now it's in a down channel. Now, if it breaks up, it could hit here, but it still has, you know, it's got some resistance up in here. If it starts to fail this 42, then look for support down here. So this, again, this isn't an hourly. This may be bear flagging and it may go down a little bit. You see these these channels? See how I can draw those channels much better with the larger cap stocks? All right, later, Chemo. So that one, that's these are bearish ones that I'm looking for to see. Again, I look at the daily setup and then I kind of go on the hourly, and then looking to see if it fails that down channel with support down in here. Baidu, you can see probably very similar pattern. So you see again, guys, I'm kind of connecting the peaks and the valleys, kind of coming up and down right in here. It's hitting some rejection. Now it's in this down channel. Now I want to see if it's going to fail that kind of that 96.75 area. You have some support down in here. So, you know, again, these are ones just trying to, the ones on the watch list when we can get them on here. You know, these are a lot of times ones that just kind of pop. You know, maybe you'll get a day or two move out of it. Got to watch and see, but you can see it's now failing right down in here. If it starts to fail this lower trend line, look at support down here. It may bounce up and down and, you know, trade downwards, right? So again, kind of find these channels. Super, very, very, very important. This making sense? Apple. Another kind of down channel. You can see right here, moving average lines are bearish. Right here, seeing if it can fail the support level, kind of come down right, you know, support right down in these areas. Again, so when I put these on, you know, maybe it moves down a couple bucks, you know, and then it bounces back up again, right? You know, so obviously if you become bullish on Apple again, you want to see price bounce off here, break out of that falling wedge and get, you guys see it's kind of like a falling kind of channel. If you're bullish on it, you want price to get above, break out, and go up this way. But now, right now, it's kind of in this down channel on an hourly, right? So you'll see again, it goes up, it comes down, it goes back up, comes back down. So right here, buyers may come in, and then it needs to get above and break out of this channel. If not, it can keep potentially falling down. And last one is CVX. So you can see all these ones have pretty much the same type of pattern, guys. You guys notice that? They're all very similar pattern. Kind of has another kind of falling wedge pattern. Again, below the moving average lines, you know, down these areas right here, the 67.50, and then see if it fails, you know. But again, you know, 68.36, if it falls down to 67.50, that could be $1 move down. Maybe you're just kind of day trading this for a day or so, or it pops up, you know. So you got, again, you can see they're all kind of bearish at the moment. So use these moving average lines as a guide for support and resistance. They're not foolproof. You got to use them as a guide. Very important. All right, guys. Sorry I kind of rambled a lot at the beginning. You guys have any questions before I head out? Hopefully this is helping you guys. I wanted to show you guys trend lines and the stuff to look at here. I went on my rant earlier today because a lot of people are getting hurt and stuff by it. It was just talking to TD again, and I was just so aggravated at him. I'm just like, man, the fact that you could just literally the rep on the phone is saying to me, she's like, oh yeah, I took a whatever, just say 30%. Yeah, I took a 30% hit too, but yeah, I know I'll get it back. But you go back to the charts and you're just like you think about it, right? You spend all that time working, right, on your job, right? You work, you save all that money, all of that, and then literally just say, oh yeah, don't worry, the market will go back up. And so meanwhile, if you're not in an age bracket, if you're in an age group, whatever, 30 to 50 years old or whatever, and you're, 20 to 50 and you're still risky in your retirement, that's what they tell you. Oh, don't worry, you'll get it back. But guys, just the math doesn't lie, right? I mean, if you had $100,000 in your account, let's say, what is that? $218 divided by 339. I think that's right? 218 divided by 339. Was that 64? That's a 35% drop, right? I think I did that right? So if you have $100,000 in your 401k times 35%, where's the percent sign? I'll just do times 0.35. 100,000 times 0.35 is $35,000, right? Can anybody tell me that if they're going to feel better or worse losing $35,000 or 35% of their retirement? I don't know. Unless you're a crazy person, nobody's going to feel better, right? You're welcome, Richard. Nobody's going to feel better losing 35% of their retirement. Unless you're crazy. So I'd say nobody feels better losing money, right? So, but that's what a lot of these major companies will do. And this is what happened to me at least twice. And then even on the phone yesterday, after I'm telling her, she's still trying to convince me that she's literally convincing me. I'm showing you guys a chart here. She's still literally convincing me that that's the right thing to do. But you guys tell me, when is just whatever, say SPY. When is SPY going to go from $250 back to $340 again? Does anybody know when it's going to go back up to that point? I sure the heck don't. I don't know. Someday it will. I don't know unless something crazy happens. I don't think it's going to be anytime necessarily soon, but it could. Again, with the Fed and injecting money and God knows what they're going to do, they may prop it up again. It's not a typical market, but, if you go back to, here's a perfect example, in 2008 happened, that was at $156, right? And then you can see it kind of just fell down, right? So $156. So in 2007, all the way into, 2008, when did it get back to $156 again? All the way over here in 2012? So it's like 5 years. It took all of this, and then you could see all the way over here, right? Now, I hope that doesn't happen that again, right? But let's see, again, right over in here. Let's go back to the dot-com bubble, $152. It went from year 2000 all the way to 2007. 7 years to get back to even again. Do you guys see how terrible this process and system is for many people? You had 7 years for the people in the dot-com bubble to get back to even again. And guess what happened when they got back to even? Depending where they were, I don't know if they were still risky or not. Then they lost it all again, right? So literally, guess what happened here? The two people back in 2000 had to wait until they made profit again, all the way from 2000 to literally 2012 to start making money. 12 years from 2000. You guys see that? To start making money. So that's what I'm trying to say to this lady. I'm just appalled. I'm absolutely appalled. I like TD Ameritrade for Thinkorswim, but I'm appalled at just the arrogance that these people talk like this. Oh, don't worry, it's going to go back up again. And meanwhile, just say I had 100,000 in an account. She's let me just take a 35,000 drop. This could still keep falling, guys. We ain't in a clear by any means yet. This is still failing the 50 on a monthly. This could still fall. What if it falls down here? Don't think that, if you start shutting more of the country down and these types of things, and we're dealing with this crazy virus and who the hell knows what's going on, this market could still fall. What if it happens if it falls to $170? that's a half, that's half of retirement right here. So if you have 100,000 in an account, that could be down to 50,000 down here. Let you take, and how long until it goes from 170 back to 340 again? Hopefully it doesn't take the same time period as it did in the dot-com bubble of 12 years, right? But there's no guarantee. There's no guarantee. Like when the market comes down way down here like this, there's no guarantee it's just going to go back up to here. So you guys tell me, right? I mean, you tell me, like, where am I wrong in saying this? Eventually, I think it's going to come back up here again. But, I mean, when? Trump may do something to bring it up like this. I sure the heck hope he does. But I'm not going to paint some rosy picture that it's just going to magically go back up here again. But that's the industry, guys, right? They put your algorithms and your age group and all that stuff into a system. And you know what? If you're at the age of a hardworking person in your risky years, my age group of 41 years old, guess they put me in a risky class. They put me aggressive. And if I'm aggressive up here, guess what? I just lost 30% of my retirement. Right? Or you can learn the stuff yourself. Learn patterns yourself. It might take a year or two to learn the stuff. It takes a while to learn these charts. And then maybe you're trading, stocks, or maybe you're trading, the SPY, right here. Here's a perfect example. Well, that's 2002. You could have rode, depending on your trading strategy, maybe you trade a weekly chart or a monthly, draw your trend lines. Use that 9 EMA as your guide. What the heck is going on with my chart? So where did Trump get into office? 2000. I always forget. Is this into 2016? Or is it right back in here? So, that's for me personally. I like a weekly chart. These candles on the monthly are nasty. I like weekly myself. Just, it can kind of, I like that ride the 9 strategy myself. So you can go back to, where was it? Where the heck is, oh, yeah. There we go. Something's going on with my charts, guys. I don't know what the heck's going on with them. Okay, so right back in here, right? So, again, that ride the 9 strategy, if you have a good entry, right here, you get off support, right? So you kind of a flag right here. And as it goes up, if you rode it from... Now, the problem, right? The problem with the ride to 9 strategy is this, right? If you did it, let's say, in a weekly, you got in here. If you waited to a candlestick close below the 9 to get out, you give all these profits back, right? But on the weekly chart, if you look down in here, you would have said, maybe, hey, as it's breaking out, maybe you take your profits out up in here. Now, again, it shot up more, right? So you could lose some profits, or you can kind of, start waiting to see some of these different, patterns as reversals. Again, nothing's perfect, guys, right? You'll take profits early sometimes, but then, you might take profits earlier and then not give it back, right? So this is where, let's say something like this, as, let's say you took profits out here and then you're waiting and then like, oh, dang, this thing took off. Well, that sucks, right? So you're like, oh man, I gave profits. I took my profits here and then the market shot up for about a month after that. I just gave back so many more profits. But then look right here, this comes back down and then look down here, right? So you would have actually, you're upset that you gave back this month of profits, right? Because you sold too soon. But then guess what happened? You didn't take the loss. So technically you'd still be up more here than you would down here. So this is where you could also go into daily charts and stuff like this. I'm just showing you guys a weekly charts. This is where I kind of like, I personally like more daily better because I can kind of see, I can just ride it a lot more tighter like this, right? So I can kind of, you get a good entry, let's say I'm in back over here, I could be out right over, maybe even right in here, so I can keep it a lot tighter, you know, and then as it starts to fall back down, let it fall, get back in, and then maybe ride it up again. Then you start seeing here, get out. So I personally really like the daily charts more myself. So this is a way to kind of, you know, you can trade SPY, you know, have an IRA, trade SPY, you know, and then when stuff does like this, maybe you're out of the market. You know, if you're kind of doing it yourself, that's where I'm going to practice doing it more myself. I just haven't had any time and energy to do it, but now I'm going to start doing it more. I'm going to practice doing it myself. And then these times when it's like this, I'm probably not going to do anything. I'll sit out. But you know what? Guess what I won't have happen, guys? I won't go from $340 down to 220. I won't take this hit. So you could have had like all these profits along the way, sat out, you don't take any of the hit on the way down, and then you look for these channels on the way back up and start to see again. Are these moving average lines going to cross again? You know, maybe you're waiting until it gets up here again, and then, okay, maybe I'll decide to potentially go long again. And then if price can't break all-time highs, maybe you take profits again. Right? Just because this may form a huge V-bottom, go back up again, but just because it goes back up again doesn't mean it won't do something like the double top back in right here, right? So you see that V formation? We might form another V formation like kind of over in here. And it might go back up again, and guess what? If these peaks can't break this peak, you're in trouble. Boom. So yes, it'll probably go back up again, but guess what it's got to do? It's got to go and break $339 again. And if it doesn't, you potentially could have what I just showed you guys back in here, a big, huge double top. And then guess what happens? You spend all those years, it falls back down again. Everybody feels great. And if it doesn't break here again, you can be right back down again. So meanwhile, you guys see how the problem is? You could be years dealing with this stuff if you don't know charts. And most advisors don't know charts. I'm telling you guys, challenge your advisor. Ask them if they can read this. If they can't explain this to you, that's a problem. You need to have an advisor that knows how to read charts and that won't leave you exposed. You know, I mean, this is just a huge warning sign right here. This monthly chart of the spot right up in here, you have a freaking shooting star pattern. Price is so overly extended. Right here, this is a major warning sign. Why advisors would have like their people risky way out there. I would never tell you to buy a stock out there, right? So if I would never tell you to buy a stock way out here, Apple or any stock way out here with this candlestick, why would I have your entire retirement in risky funds? It's just so stupid. But unfortunately, that's the industry, guys. Hopefully that's helping you guys. I showed this to you guys because I really want you to take the time and learn. Again, on our website at bullishbears.com, we have lots of courses and stuff to help you. We have the links below. Learn these patterns, guys, because you know, if you find the right person that can manage your funds, it's a simple phone call, guys, right? Obviously now when this happens, you're kind of screwed, but you know, when price starts getting way out, you know, way out of these areas, like way out here, right? So you can see these doji candles, look, way up here on a monthly, what does it do? It comes back down. What's it do? Comes back down a little bit, right? That's a monthly chart. Again, you can zoom down shorter, but you know, hopefully that helped you. Does that make sense, guys? I'm going to end this stream. I went way longer than I thought, but I wanted to try to help you guys, and I just got frustrated with talking. I just get disgusted. I'm sorry, guys, but you know what? I'll insult probably some financial advisors, but I'm sick and tired of these ones. Financial advisors, many of them remind me of car salesmen, you know? Oh yeah, this car is great. It's great under the hood. Don't worry, it's going to run forever. And then they say, you know, it's just like, but then they're not telling you about, oh yeah, the tranny's going or something else is going or something, right? You know, it's just like, oh, don't worry, the stock market's going to go back up again. That's the crap they're saying right now. Oh, don't worry, the stock market's going to go back up again. But you know what they don't tell you? When. They don't tell you when. And that's a problem. So as traders, we show you when. It's never again, foolproof, right? You might sell too soon or you might get a bad entry. That's where you have to minimize your risk, right? That's where risk management comes in. That's when I made those videos back in December. I said to you guys, hey guys, I was more nervous going into 2020. Got to be careful. I said, could the market still continue going up? Absolutely. You might give up some of those profits. And that's what happened, right? So back in, or was it? October, right in. It was right in here, right at the end of December. I said, could the market still go up? Because I was concerned right at these candlesticks. See how they're very overextended away up here? I was concerned. I was like, hey guys, could the market still go back up? Sure, but going into election year, I was nervous and all this stuff going on. I said, you know, be careful. And what, you know, I said, so you could still make more money, but I said, I was showing in the videos, watch out for these moving average lines below. So what did it do? I look like an idiot. So technically I look wrong, right? I get faked out by this reversal candle and it goes up from 322 to let's say 340. That's a $20 move I gave up on, right? So I sold right here, let's say too soon. I could have made $20 more. So for 2 or 3 months, I can kick myself saying, dang it, I lost money. Yes, we have a website, Sean, links below, buddy, bullishbears.com. So you guys see here, I would have made potentially, just if I was trading SPY, $20 more. So now, oh man, I sold too soon. But guess then what happened, right? It goes from 340 down to 220. That's a $120 drop. So like, you know, that's the risk reward, right? Do you want to risk potentially 200, you know, 10 or $20 more for the chance to lose 100 plus, right? What goes up eventually is going to come back down sometime, guys. But that's why you want to see stuff like this. Market come up close to these moving average lines. You want to be careful when price gets way above these lines, right? Way above these lines, way above these lines, way above the lines. It comes back down eventually. Timing can be off, right? So that's that, guys. All right, that's my rant. I get frustrated, guys, because a lot of people are getting burnt. A lot of people are getting screwed. And, you know, if you learn stock charts, you could really, really save yourself. You know, it's all about risk management. Even in, again, you know, so you could say stock trading, very risky, hocus pocus gambling, right? So you can, so someone could say, well, you're a gambler as a trader, right? You know, you got to just be in it for the long term, right? But then I could also say, well, you are a financial advisor is a gambler risking my entire savings up here. So my gambling got out too soon. And guess what? Their gambling of telling me the market's just going to go back up again, it falls way back down here. If they knew charts, they would have said, hey, risk reward, maybe I don't want to be so risky right now at this point right here because these candlesticks are warning you like, hey, be careful. And then boom, drops right back down. You're welcome, Juan. All right, I think I'm officially done now. I keep going with my rant, but you guys have a wonderful rest of your weekend. Stay safe out there, and I'll see you all later. Enjoy.